What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did see a huge wave of volatility as we saw the indices coming down to critical support levels. Is the stock market going to roll over and we see a full-blown stock market correction? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, because it's Friday we will take a look at the bank account, which we can see was down 1.13% today, which was obviously from that end of day sell-off. For the 1 week, we're down 1.57%. 1 month, we're up 1.89%. And for the 3 months, we're up 6.7%. So we still have a really nice growth curve here of higher highs and higher lows. And if we are going into a period of high volatility, BANC is going to do very well. So if you still haven't tried BANC Trade Alerts, don't forget I am running a 50% off promotion code for your first month. And this could be the best month to try it out if we are going to see a lot of volatility. Alright, so jumping into SPY, we can see we were down 0.79% today with a very ugly and very bearish looking candle. We can see this candle did gap up and we did slice right through many critical support levels. Remember that we're still in a bull market and critical support was right there at that 20 simple moving average, which was 448. We sliced right through that level and closed below the next support level, which was down here at 446. So it looks very likely we could come down to close this gap down here at 443.8. Remember, below that gap, the next strongest support level is our 50 EMA at 441, but we don't want to just assume that we have to go down and hit that support level because we can see the market has done this many times before. If I go back just a little bit in the past, we can see back here on June 18th that we did see the stock market have a huge sell-off and we came all the way back down to the 50 EMA, and then 2 days later, we had a strong bounce off of that level. We were back above all the moving averages and we regained the bullish trend. We could see something very similar here on July 19th, where we saw the stock market blasting right through the 20 simple moving average and tagging the 50 EMA. And yet again, 2 days later, we're well above all the moving averages and resuming the bullish trend. Fast forward to about August 19th of 2021, and we could see that we again sliced right below the 20 simple moving average. This time we did not touch the 50 EMA. And 2 days later, we're back above all the moving averages and regaining the full bull trend. So is the fourth time going to be an exact repeat of these last 3 attempts? Only time will tell, but do understand that it's always possible we undershoot support and then we do get a very strong bullish rally coming out of the hole. So don't just look at this like the stock market has to roll over. We are starting to lose the bull trend on SPY, but we did see the bull trend getting lost back in July and we did regain it only 2 days later. So it's always possible coming off of these strong support levels that we do get a very strong bounce. And overall, this is still a very strong bull market, which is not likely just going to roll over and die easily. So still watch these critical support levels at the gap close at 443.7 and the strong support level at the 50 EMA at 441. Below 441, we still have support at 437 and the gap close at 435. So watch those levels if we do get a breakdown going into the price action on Monday. Now to the upside, we're definitely going to see resistance around this 20 simple moving average, which is at 448. So if we blast through that level, we could start to regain the bullish trend and we could start to break out to brand new all-time highs. We will have a resistance trend line right around $451 that we need to break out above, and we will still need to break out above 453 to make a new all-time high, and then we will validate our price target at 457. So coming out of this hole, we really need to break back above about 448. If we don't break back above 448 and we form a lower high, this could get ugly and we could see this market finally rolling over and we could see a full-blown stock market correction. Remember, this is Septembear and this is one of the months that we're most likely going to see the majority of the volatility. So if there's ever going to be a time for a stock market correction this year, it's most likely going to be this month or next month in October. So remember that typically speaking, September and October are going to be your bearish months according to seasonality, so you do want to be a lot more cautious. We do see selling on this very ugly red candle on increasing volume, so we're definitely starting to see an increase in volume on red days, which is never going to be a bullish indication. A lot of that volume came very close to the end of the day near the close, so that will be something we need to pay close attention to going into Monday's trading session. So watch that critical resistance at 448 and the critical support down here at 441. If we lose 441 and we start to roll over, we could see a full-blown correction and we could come all the way back down to the support trend lines. Remember, don't just assume we have to come down there. Watch that strong support level at 441. On the Nasdaq 100 QQQs, we also saw a very bearish candle and we did see selling on increasing volume and we did come down to that support level around 376. Now the Nasdaq 100 did not lose the bullish trend and we still haven't tested critical support, which is going to be right around 375 going into the Monday's trading session. So watch that strong support level around 375 because if the price action doesn't break below it, we're not likely going to lose the bull trend. Now it's still possible the NASDAQ 100 is just lagging the rest of the indices and it's also going to come back down below the 20 simple moving average, but you need to stay objective and you need to follow the price action and play it day by day. So watch that strong support level right around 375 and below that we'll still have support at 370 and the gap close at 368. Our 50 EMA is right around 367, so we will have a ton of support around 368 to 367. If we stay above 375 and we continue to bounce higher, we're still going to maintain the bullish trend, and we could attempt to break out to brand new all-time highs. Our strong resistance levels to the upside are still 382, and above that we have the price target at 388. So stay objective and make sure you're following the price action because these volatile markets could swing wildly in either direction, and you don't want to get whipsawed. Stick to what you're best at, whether that's short trading or long trading. Only short at resistance levels and only buy long at support levels, and don't get sloppy in a volatile market. You can make a lot of money in a volatile market if you're disciplined and you have a solid trading strategy. On the Dow Jones, we were down 0.75% today, and it is the second day in a row closing below the 50 EMA, and we did see the 5 EMA crossing below the 50, so it does look like the Dow Jones is officially rolling over. We're forming a lower low here on the chart and we're losing the bullish trend and building up some bearish momentum. So there's really nothing about this chart that says bullish. We see price action slicing right through 348 and our next support level will be down here at 346, which is the gap close. Below that, we're going to see a lot more selling and we could come all the way back down to about 341 or possibly even 340. So pay attention to these sell-off days on higher volume and breaking right through critical support levels. And we are getting the confirmation on the Dow Jones of the rollover with the second day in a row closing below critical support. So is the Dow Jones leading the way lower? Obviously it is, and SPY is right behind. So if we continue to see this trend, it's more than likely the triple Qs are going to be following suit. So pay attention and look at the broad market as a whole, and we are getting a lot of warning signs in the indices like the Dow Jones, which started rolling over first. Remember, it looks like the Dow Jones topped out on August 16th, and it looks like SPY topped out on September 2nd. So the Dow Jones definitely looks like it topped out and started rolling over first. So look for SPY and the triple Qs to potentially follow suit. I'm not saying they have to roll over, but it's very likely they could and they're just lagging behind the Dow. To the upside on the Dow Jones, look for critical resistance at 350 and 351, and we need to break back above 353 to start regaining the bullish trend. On the Russell 2000, we were down about 1% today, slicing right through all the critical support levels, and price action is back below all the moving averages. We don't really see the increasing volume on the selling in the Russell, but we still do see a very bearish candle, and we are starting to lose some of that bullish trending that we are building up. So price action below all the moving averages, and we're slicing right through that critical support at 222, which means the next support levels will be 219 and the gap close at 216. So look for that potential gap close if we lose that support level at 219. To the upside, we have resistance at 222, 224, and 227. And it does look like the Russell 2000 is rolling over if we get a second price action close below 222. Remember, the Russell 2000 was never in a bull market like we have in SPY and the triple Qs, so it's really just the normal choppy price action movement that we're used to seeing in the Russell. So watch the price action at these critical levels and don't get too bullish because there is no bull trend. On the ARKK ETF, we were down just over 1%, closing right on top of critical support at 120. Remember, if ARKK loses the critical support at 120, look for the gap close at 116. And below that, we could come back down to 115.5 or about 113.8. To the upside, we still have strong resistance around 122.6. And if we can break out above that, we could start running to about 125.6 or 128. Overall, ARKK is still looking bullish as long as it's above 120. So wait for that price action break down below 120 before you assume the gap at 116 is going to fill. On the VIX, we had a huge spike in volatility going up over 11% today, and we see the VIX closing above 20, but still within our upper resistance trendline level of 21. Remember that this is still just a normal, healthy, volatile pullback as long as the VIX is staying below 21. If we get a breakout and a VIX level close above 23, now we're looking for a deeper pullback or a stock market correction. So it's still possible the VIX will hit this resistance level and then get crushed all the way back down towards support, which could take the VIX from 21 all the way back down to 16. Obviously, that would be bullish and it would mean the stock market pullback is ending and we could see new all-time highs. However, if we see the VIX breaking out above 20 and closing above 23, that means this pullback is just getting started and we're likely going much lower. So watch the VIX closely at these levels. So those will be your critical levels on the VIX, above 21 and closing above 23, or getting crushed back down below 18.2. Below 18.2 is bullish and above 21 is bearish, and it does mean we could see a full-blown correction. On Bitcoin, we're currently down about 2.5%, sitting right on top of that critical support at 45,000. Remember, as long as Bitcoin is holding above 45,000, it's still bullish. If we lose the 45,000 support level, we will have critical support at 43,000 and right around 37,500. Below 37,000, we could come all the way back down to 30,000, and it will look like Bitcoin is rolling over. We're seeing the volume drying up on the selling right at critical support. So overall, Bitcoin is still bullish at this time, even though we did lose the bull trend. Price action is king, and price action holding above support is always going to be a bullish indication. We need to see Bitcoin breaking back above 49,000 and then breaking out above 51,000 to start seeing new all-time highs. So watch those resistance levels closely. On Amazon, we were down about 0.43% today, and we see Amazon closing below the 5 EMA and still getting rejected at that resistance trend line. Remember, Amazon needs a break above 3,500 to close the gap at 3,580, and we will have a resistance level at 3,552 on the way to close that gap. To the downside, look for strong support around 3,400, and below that, we could come back down to 3,311. Overall, Amazon is looking bullish, but we don't have that 20 simple moving average back over the 50 EMA yet, so we don't have the full bull trend. It's very likely if we lose 3,400 as support, we're going to easily come back down to 3,300. On Tesla stock, we were down about 2.5% today, and Tesla did close the gap. We had a gap to fill right around 734, and we did close that gap, and we still see price action above the support level at 732. So overall, Tesla is still in a bull trend, and it's still above support, and we're just seeing a pullback since we hit that price target around 765. We can see Tesla bouncing from here and breaking out above 765. It could easily start running to $800, so watch for that price action breakout. To the downside, if we lose the support at 732, look for strong support at 714.5 and around 698. Below 698, we still do have the support trend line, but Tesla will be looking a lot weaker. Overall, we still see higher highs and higher lows, so Tesla is still in a bull market. We don't see selling on increasing volume, so overall, even though this candle is ugly, we're still above support and we still have a strong bull trend. On Apple stock, we were down 3.31% today, and we closed right on top of support at 149. Remember, Apple hit my price target up here at 157, which means it could be ready for a correction, and right now we're seeing huge selling on increasing volume, but we are sitting on top of support. We lost the support level right around the 20 simple moving average, which is just below 151, but we're sitting right on top of the resistance trendline breakout, which could now be a support trendline. So look for support at 149, and below that we should have support at 146.5, and below that, if we break below 145, we could start running to close the gap at 137. So overall, Apple could have hit the price target and is due for a correction, but it's too soon to tell because we're sitting right on top of support and we still have the bull trend. If we break out above 157, follow the price action, and your next price target will be 162. So while this is a bearish looking candle on increasing volume, Monday's price action will tell you a lot if we do see a strong bounce off of support. On the financial sector, we were down about 0.75% today, closing right on top of the 50 EMA as support. If we lose the support level, we could start rolling over, or we could see a strong bounce from here and attempt to go back into a bull market. The industrial sector was down 0.45% today with bearish price action, and we are starting to see some bearish trending developing. This could be a warning sign for the Dow Jones that there's more downside coming. The healthcare sector was down 0.92% today, closing well below 3 of our 4 moving averages, and it does look like we're very close to retesting the 50 EMA. We're losing the bull trend, so the healthcare sector could be rolling over if we close below the 50 EMA. The energy sector was pretty flat on the day, only going down 0.04%, but we still see price action below all the moving averages, and we're still developing some bearish trending. If we see the full bear trend, we could see the energy sector going back into a bear market. We need price action back over the 50 EMA to prevent the bear market from forming. So jumping back over to the S&P 500, this is definitely the warning signs that I've been trying to tell you about the month of September with the volatility that we could be seeing. We're starting to see some bearish price action blasting through some critical support, and it could be possible we're finally due for a stock market correction. So stay objective, and right now you need to be a lot more cautious because this bull market could be losing the bull trend, and we're losing some very critical support levels. So be patient and treat this as a falling knife scenario and watch these very critical support levels below. Remember, if we're blasting through support levels, you don't want to try to catch a falling knife because you never know how low we can go. It is possible we already topped out in this market and we're due for a large correction, but you don't want to just assume that. You need to follow the price action and stay objective. So watch resistance and support levels. In a bull market, you want to see price action bouncing off of these key support levels. And if we're going into a correction, you're going to see rejections at the critical resistance levels. So the price action will tell you everything you need to know. You just need to be disciplined and be patient and let the price action do all the talking. If we're losing the bull trend, you can't use that as your bias any longer because a market without a trend is going to be a lot more choppy and the price action is going to be all you need to follow. So be patient and stay disciplined, and if you're not sure what to do, you're better off just doing nothing at all. Also, don't forget that I do have my own trade alert service that will do very well in market volatility called BANC Trade Alerts, and it only trades TQQQs. You get all of your buy and sell alerts, and all you have to do is follow along. And I'm currently running a 50% off promotion code for your first month, so now could be the best time to try out BANC Trade Alerts. If you're interested in joining, you can find out all of the details and how to join by clicking on the links in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.